A real estate transaction is potentially the largest investment we make in our lives. Whether you're buying and selling your personal home or investing in real estate, you need the knowledge to make the right decisions. Get ready. Robin is a Texas realtor and has the experience to give you the information you need to make the right decisions. Welcome to Relax, I Got This with your host, Robin McCoy.
Hi, everybody. I'm Robin McCoy, and welcome to Relax, I Got This. And today our guest is the one and only Christian Johnson of Caliber Home Loans. Hey, Christian, how are you?
Buddy, I'm great. How are you?
I am wonderful. Thank you so much for being here today. I so appreciate it.
Yeah, no, thank you for having me. How fun is this?
It's a lot of fun. It's a lot of fun. That's why I do it. If things aren't fun, I stop doing them.
I love your background. What's going on there? It's like you got that rope makes me think you have a swing in there. You play Tarzan?
Well, it's actually a monkey lamp. I can show you somewhere. Where is he? There he is.
Ah,
He's a monkey lamp, and this is
really
really
swinging from a rope, but really cool.
And this is, of course, my lovely wallpaper that my friend and designer, Karina Wright,
Yay,
did
Karina.
for me. So.
Love
Yeah,
it.
so it's pretty cool.
Fun.
So anyway, let's tell people who you are. Christian Johnson is the branch manager of the Park Cities and Kessler Park locations for Caliber Home Loans. He has over 2 decades of mortgage experience, listening to customers' needs and determining the right path for mortgage success. Christian's attention to detail, proven systems, and tenacity in today's home financing world reveal why he has been chosen as one of the best mortgage professionals in Dallas every year for 8 years running. Christian cultivates and builds strong, long-lasting relationships with his buyers through their listing and selling agents. He continually fosters these relationships through strong service levels and affinity relationships. In an age of great technology, Christian is still committed to providing high-touch personal service for both the client and the referral partner. The exceptional service from Christian continues long after the initial purchase of the home. So I've known you since I got my license in 2008.
Wow. Yeah, it's been a while. It's been a minute.
You at that time were in our office as the resident lender.
Yep.
I guess is what we call them. And you taught me a couple things.
It's been a journey, and I think we've all learned a few things since 2008.
Yeah.
We've seen some crazy markets between here and there, and we've all grown. I don't think I had hair then, but man, it was kind of fleeting at the time. So.
Yeah, it all looks the same to me. I don't know if I've ever known you with hair. So you didn't pull it out in the last 15 years.
That's good to know.
All right, well, let's talk a little bit about this. You just said we've been through several markets over the last 15 years that you and I have known each other. And most markedly recent, right? We've had 2 years of record-breaking, unheard of interest rates. So the market's been insane.
Yeah.
And then all of a sudden it shifts. Let's talk about how that affects a person's buying.
Yeah.
Yeah.
Okay. So, the last 2 or 3 years, unfortunately, we went through a pandemic.
Yes.
And that was really scary. And, no one knew what was going to happen next. I kept thinking we were going back to the office any day now. I worked out of the garage. I made it till about June 30th. And I said, that's it. I got to move in the house. But I kept thinking I was going back to work.
Yeah. Yeah.
This thing was going to be over. But, what they did to try to spur the economy and make sure that the walls of the United States didn't crash on us is that, they lowered rates. And it created this once in a lifetime event that we've never seen before. I hope, honestly, we never see again.
Yeah.
Right? I don't want to go through another pandemic.
No.
But we set some expectations for rates around the 2s and 3s.
Yeah.
Which is silly.
Yeah.
And, we, with all due respect, we had a lot of millennial buyers who got in the market at that time, took advantage of a fantastic time, but created this expectation, but that is the rate, right?
That's this false sense of normalcy.
Right. Because it was 2 years, right?
Yeah.
And so we created this false market and expectations. And as we exit that time, you got to realize that there's elasticity, right? When rates go down to the 2s and 3s, it is going to have to snap back the other way. And
Right.
that's kind of where we are. You know, if the 30-year average on rates is say 6.5, those are normal rates.
Yes, normal rates.
Normal rates, kids.
Normal.
Then you know, and you were here at 2s and 3s for a long time. You got to go to the other end of the spectrum to kind of get back and buoy
Into that
want to be in the middle.
that
right?
middle place. Yeah.
Middle's awesome. Right now, we're probably a little over here. We're kissing 7 on any given day.
Yeah.
I wouldn't
Yeah.
be surprised to see 8. You know, when before this is all over.
Yeah. Yeah.
Part of me wants them to just rip the Band-Aid. Let's get this thing over with. And let's go, right?
Yeah. Yeah.
But every time they move the rates, the Fed moves the rates, it moves the market, it creates this, oh my God moment that people back
They
up
freeze.
and they freak out. Like, oh, it just took away the candy,
Yes.
right? And by the time they start going, okay, maybe that's good candy. Maybe I like that candy. Maybe that's gonna taste okay. I'm gonna start looking at houses. Then the Fed does it again.
Yeah.
And then so we're back here. So
Yeah, you're right. Let's rip the Band-Aid off. Let's get it where it's going to be and let's roll with it.
right. So we got to get everybody to pallet 7 or 8% interest rates. Then the market will balance itself out. Here's some interesting statistics just for DFW. Now, the rest of the country may have some suffering in prices,
Yeah.
but we've done an amazing job in DFW. And we met with Steve Brown yesterday from the Dallas Morning News.
Mm-hmm.
Last year, from July 20 to August 21, we added 260,000 jobs in DFW. It's 260,000 people that moved here for work.
Okay, so that's new jobs.
New jobs, new people that came here from elsewhere.
260,000 over the course of a year.
260,000 in 1 year in DFW. Okay, we were already at an inventory shortage at that
Right.
time. The whole year we were inventory short. We built 63,000 apartments. We built 53,000 new homes. Okay, the quick math there is we're 120,000 units short. So, you know, as far as home prices and someone trying to time the market going, well, I'm going to wait for the prices to come down because I'm hearing that's happening in California. And that ain't happening here. So like,
Yeah. Yeah.
it's not going to happen because
We've just been this protected bubble.
if Robin lists one house, there's still 120,000 people bidding on it.
Yeah,
It's a
yeah.
place to live.
Yeah.
So we keep continuing to create jobs in DFW. Deloitte no longer has a presence in San Francisco. They've moved all their operations.
Everything's here now.
Yep. Fidelity has all their
Somebody else I
operations
just
out
read
west.
had moved everybody here, and I can't think of who it was.
And Goldman Sachs is moving everybody here from New York.
Yeah. Yeah. They're
That's
opening a
also
big
a
facility
financial hub.
downtown.
Those people are buying like expensive houses. too,
Yeah.
by the way, right?
Yeah.
They're financial. So this is not going to slow down any
No.
anytime soon. So, you know, while we anticipate this recession to go for a little while, we need to get a balanced market. The Fed's going to let unemployment run a little bit because they need people to stop spending money. And when that happens, then they're obviously going to start lowering rates a bit because, again, we want to get back to here, right? So
Right.
rates are a little over here. They want to get back to here. When we get back to here, then they're going to be happy. And so right now they do need unemployment to pop up a little bit. And there are going to be markets in this country, no doubt, that are going to suffer some pain, right?
Yeah.
California is going to hit 15 to 20%. Miami is ridiculously overpriced. You know, it's going to.
Yeah.
DFW is still a buy. People move here because it's affordable. Our housing is
Yeah.
affordable,
Yes.
and they also get here, and then we didn't build enough houses for their arrival. Okay.
Nobody told us everybody was coming for the holidays. You know, we don't have enough chairs around the table.
We're 120,000 units short. Okay, well, so, you know, 7% rate, 8% rate, those people are still gonna have to buy a house.
Yes.
You know, once we get back to here, then rates are gonna come back down. I think 4s and 5s.
You think that is that kind of your
Yeah,
expert guess that that's where we'll probably land eventually?
and I don't think that's like 2 years out. I think that's within 12 months.
Yeah.
You know, I think they're trying to just crash the thing. They're trying to get there. Remember what I said earlier? Like, let's just do this, pull the Band-Aid.
Yeah. Yeah.
The next 2 months is the Band-Aid pull. Okay. So we're going to get through this Band-Aid pull. Got to wait to exhale. And then all of our friends that have been doing this are going to come taste the candy.
Yeah.
And then we're going to be okay. It's going to be, it's going to work out. But
well, and I think what happened over the last 2 years, again, you know, the drasticness of everything, people were still moving. Nobody knew what was going on. And when you know, and again, all due respect to that age group of the millennial early buyer, first time buyer, they'd never seen anything because they weren't paying attention before because it didn't concern them because they were 14.
Yeah.
But when, you know, now they're 25 to 30 and they've only seen 2 and 3%. So their head explodes when they see 7 and they don't know what to do.
Generationally, we don't communicate well.
Right.
Because our parents are saying, well, you should have seen the 80s. That was 18%.
18%.
Right? We were doing fine now. You know, okay. We don't, that's their reality. Susan.
Yes. So now we have to, so when a buyer comes to you or a borrower comes to you and they say, okay, what can I afford? I want to, you know, and how does that change? Because that rate is right now changing essentially hourly, right?
Yeah.
I mean, it is, and it's going up and down like this. So now I'm here and I just went under contract on a house and, you know, we thought my interest rate was going to be 7. I'm picking a number. And now it's 3 days later and everything moved. And now I'm at 7.25, 7.5. How does that change? One, holy cow, how do I buy a house and can I still buy the same house?
Right. Well, and you know, great agents like yourself are checking that frequently before they go into contract going, hey, I'm about to make an offer at 300,000. Are they still good?
Yeah.
You know, rates have doubled since January, more than doubled at this point since January.
Yeah.
So we have to take that in consideration. What I also want to take into consideration, because memory is short, is 6 months ago, 5-6 months ago, entry to the game was buying over list price. Are we going to spend $25,000 over list? Are we going to spend $100,000 over list?
Correct.
And that was like the apprehension was, I got to get this house. And those rates were 4s and 5s, by the way. But how much are we going to spend over list? Well, if the payment now from 6 months ago is $200-300 more per month, that's a far better savings than 25,000 over list.
Yes.
Right?
Yes.
Or
Yes.
100,000 over list.
That's cash.
So
That's cash.
Today's actually a buy because in this market, we're buying houses at 97 or 95% of the sales price. So you're actually getting the house at a buy because it's a balanced market on the purchase side.
Right. That's an interesting perspective because they're not, now it's not trying to figure out how much over list we have to offer to even get in the game.
Right.
Now it's, all right, where's it priced? And if it's priced correctly, then it's a different story, right? Because now it's, well, we've got 3 other offers. So we may need to go a little over just to sweeten the pot for the seller so that they like us a little better. And it doesn't impact your payment as heavily. So it's an interesting perspective. It is more of a balanced market on the buy side.
I think we are failing to recognize that because we get our wound up around the hub over rates.
Yes.
And if it's $200-300 a month, and let's say this lasts for, you know, let's say we refinance in 10 months. So 300 times 10 months is $3,000. It's far cheaper.
Yes.
Than
giving somebody 20,000 cash right up front right now.
Right.
Just to get in the house. That's so before you do it.
Perspective is that we forgot what we were going through a hot minute ago.
Yeah.
And we're in this because the media and everybody wound up about rates when they're forgetting that, hey, now might be a good time to buy a house and get a deal on it. 97% is about the average. 97% of the asking price is about average right now. And that's a pretty good deal.
That's the way it was pre-pandemic.
And let's talk one more further. So what happens to the client that says, I'm waiting this out. I'm waiting until rates get back in the 5s. As Christian said, they're going to go in the 5s. Okay.
Yeah.
Do that. your competition's going to be paying 25,000 over ask again.
Yes, yes. I mean, it's because the real estate market does this, right? And it's never going to be that. And you're never, it's like trying to time the market or interest rates or any of however you want to, whatever the verbiage is you want to use, is like catching a ball on the bounce. You can never catch it on the bounce. It's already starting on its way back up.
Right.
Always.
Never try to time it.
No, just when's the best time to buy a house? When you need one.
Be the leader you know you can be. Build your professional network and access education that takes you where you want to go. We are women of all ages and backgrounds. You deserve national recognition and opportunities to build relationships with people you want to work and grow with. Hit the ground running with the Charisma chapter of the American Business Women's Association. Meetings each month from 6 to 8:30 p.m. on the fourth Tuesday in Farmers Branch, Texas, and online. Come with us. Experience ABWA for yourself. Go to charisma.abwa.org to learn more.
Today's rate's 7, and let's say in 10 months we can lower you down to 5.5. That costs you $3,000 and maybe closing costs. So let's make that $8,000.
Yes.
You're still doing better than 25,000. And by the way, then we'll fix your rate, put it on a 30-year fixed product, and then you just forget about it.
Yeah. Yeah.
You're done. You just won the game.
But you're right, you know, and I think
the house and the rate at that point.
Yeah, you got the whole family all together. But it's, you know, and for years we've been talking about fixed rates or fixed rate loans.
Yeah.
And now I think the adjustable rate mortgages are coming in. We're seeing different because it makes sense if you're going to be in the house.
No matter what loan you're getting today, you're going to be refinancing here in a bit.
Yeah. Yeah.
So, you know, just get one with the lowest carry cost right now.
Yeah.
And then we'll figure it out later. We'll clean it up later. Go get that house at 95, 97% of the sale price.
Right.
Deal. That's the bargain right now.
That's where you want to be.
Right.
So like you said, then you can clean it up later. I don't think people realize how easy a refinance is.
And I think when you put someone in a 30-year loan, the sentiment is, I'm bound to this for 30 years.
Right.
You're not.
No.
It's not a 30-year commitment.
No, it's you know, because you and I, you've refinanced my house a bunch of times. Because I'm going to let that house pay for itself. I'm not buying an air conditioner. Let the house pay for the air conditioner.
I don't think I get the benefit of doing that again, but I think you're right.
I think we're done for a minute. So let's kind of back up now that we know we talked about kind of the current state of the market. What does a buyer need to do up front before, aside from talking to me, before they call you? What are some of the things that you're now looking for? How can somebody that is saying, okay, we are going to get in a home in the next 3 to 6 months, what do they need to do right now?
Well, I think one thing they could do is certainly pull down one of those 3 credit reports. Don't be afraid of pulling your credit report.
Okay.
It's 3 or 4 points. Who cares? If 3 or 4 points is moving the needle in your buying ability, then we really need to talk.
We got other problems.
Then we've got other problems. But I do suggest people go get a free credit report and look at it. Sometimes there's some ahas in there.
Yeah.
That maybe we need to vault it. And, you know, certainly if you have that and you don't feel comfortable having me pull a credit report, then send me that. We'll go through that together and tell me what your concern is. And I can coach you through that.
Right.
But let's start, you know, kind of getting through those objections. Think about your budget. You know, most people call and say, hey, Christian, how much can I afford? And it's such a loaded question because I can tell someone, wow, you can afford $1 million. Oh, that's awesome. Let's go find $1 million house. By the way, that $1 million house is going to cost you about $8,500 a month.
No. So I only want to spend $2,000 a month.
So let's back that up a little bit then. Instead of me telling you how much you can afford, how about you tell me how much you want to spend per month? What's your budget? So part of my exploration with a client is kind of figuring out pain points, right? And so at some point, someone's going to say, ouch, I don't want to do that. Well, then that means we got to pull things back.
Right.
So at some point, you'll say, I need you to bring $25,000 to close. And someone will say, ouch, I don't want to do that. I need to be near 15,000. Okay, well then let's
pull it back
and get it where it needs to be. then the other part is I tell them, okay, your payment's going to be $8,500 a month. Ouch, Christian, I need to be more like $3,300 a month. Okay, well then let's get to a house that's more commensurate with that payment.
Yeah.
So, that's part of the exploration is that kind of coaching in the beginning. And then also sometimes the house will tell you a story, right? So Robin's going to go find this you can go look at 20 houses on a weekend and Sutton 10 or whatever. And you're going to pick one and say, hey, Christian, I love this house. It's amazing, but it's going to need carpet and paint. And there's going to be some upfront costs.
Yeah.
And I told you that I can bring 15,000, but really I'd prefer to bring 7 or 8 because I'd like to save the rest for this other stuff. Not a problem. So let's refigure the budget a little bit. You've created a new pain point. Let's solve that and
Right.
get you where you need to be. Or, do we need to do a renovation loan to get you where you need to be? We have to kind of handle the objections as they come in, or the concerns or the pain points as they develop.
Because sometimes we don't know what they are
Right.
until you find the perfect house in the perfect neighborhood is the perfect size, but it's been lived in pretty hard, right? So it's got paint and flooring and all these things that need to happen. And I think what also people need to realize is because the first time they talk to you and you tell them, okay, we're going to do a conventional loan at this and this and all the things that come with that, that can change. It's okay. The
Right.
product that you're going into can be different from the beginning to the end.
And then we always say is that, the house will tell you a story. The house will tell you what it needs. You're not going to find a perfect house. You're going to need something along the process. So let that develop. Don't be afraid of that, but come back and let me know where we are to get that where you need to be.
It gets into communication again, right?
Right. And you find if someone finds a perfect house, then they say, okay, well, I'm good with everything the way it stands. Good. That's
Good.
great.
Rock and roll. Let's put it.
Don't let a change of circumstance hold you back from getting in the house and making it the one you want.
Yeah. Well, and that's, I think so many people get locked into what they're told and not realizing that things can do this, right? And
Yeah.
even the market itself does this because I woke up and and everybody did, right? Everything was like all manic. And then all of a sudden it wasn't. And mind shifts and that panic of interest rates are up and now I can't sell my house for as much. And, we've got this strange time where demand is still there, even though the interest rates are going up too. Usually they fluctuate differently.
Yeah. It's an interesting, and we've seen a few cycles.
Yeah.
Again, it's just a moment in time. It's just where we
Just
are
a moment
right
in time.
now.
Yeah.
Let's make good decisions right now. And then we can make more good decisions later on, like refinancing or doing things to polish that up a little bit.
Well, and I think that's where finding that loan officer that pays attention to just because the transaction is over doesn't mean the transaction is over, right? Because that this person is at X rate or this type of loan product. And now it's coming up to, especially if it's an adjustable and it's coming up on those years where it's time to see if it needs to change, right? Where's the market today as far as rates and loan products and all of that? And it's up to us as the service provider, whether it's me, the real estate agent that says, hey, rates are different. If you haven't talked to Christian in a minute, you may call him and see if it makes sense for you to do something with your loan.
And that's why you have a team, right?
Yeah.
And so, just like having a good financial planner, a good doctor, a good dentist, you have your favorites and then you ping them every once in a while with a quick question,
Yeah.
or they ping you and say, hey, by the way, the market's changing. We might want to take a look at this. Those are people that have a fiduciary or invested relationship with you.
Yeah.
If you're just calling some 1-800 number, or if you're going just online, then no one's giving you guidance or looking out for you later on. So no one's holding the wheel and the car's just going to go all over the place.
And if they even live in the same state as you,
Right.
right? I mean, California as a whole, if I live in California, even though I may work all over the country because I'm a online loan person. I don't know. I don't have my hands on it.
Right.
Because I've got one transaction in Florida and one in Nebraska and one in Oklahoma. And so it just, you don't have
You're not as vested either.
No. So as we kind of start to wrap up here a little bit, what are two of maybe the biggest myths that people come to you with that say, well, I thought
20% down. And no, that's not true. I mean, you can go with as little as 3% down and get amazing rates and great product and super cheap payment. So, that's kind of the number one myth.
Yeah.
The other is people just think that your credit score is going to go from 800 to 400 by one credit pull. And that's simply not true. It's 3 or 4 points on any hard inquiry.
Okay.
And by the way, if you make a mistake and go online and have someone pull your credit, and then later on Robin says you need to talk to someone local who's really good, and that person says I need to pull your credit, don't panic. For us, we can go grab that other credit report and pull that in our system, so it doesn't hurt your scores. I just think people get so wound up about don't have multiple people pull your credit because it's going to hurt your scores, when really the goal is if there's something on your credit we need to talk about and address, let's jump on that early.
Yes. Yeah. Especially, I mean, if you know you've got something, I mean, and we've all got stuff, right? So to be embarrassed by it or to be any of that isn't helpful. So we all have stuff. We either have student loans, we got credit cards, we got a car, we got whatever. We've all got stuff. And if there's something that's just easily remedied with a couple of these and a couple of months, and it changes your buyability or your affordability from 250 to 400 because of this thing that's out there, let's get that off of there so that you can get into the house you want, not the one you have to get.
Right.
Because if you will just pay everything on that, but don't close it, and people don't know what they don't know, and I think that's the problem.
It's an easy coaching session.
Yeah.
Pen and paper. Let's go through this, and here's the things you can knock out. You can knock it out in 30 days, and suddenly your buying power is exponentially greater.
Yeah, and I don't think people realize that how much of that is buying power, and what that enables you to do when you are able now to call a listing. We've made an offer, and you call that listing agent on behalf of that borrower and says, look, we've checked this and we've done this and their scores are great and ABCD. It makes that seller feel comfortable that that you can actually buy the house, and nothing's going to go sideways as the underwriting process begins.
Right.
So what didn't we talk about? What did we miss?
Possibly what could be needed for a pre-approval.
Oh yeah, let's do that. Let's do that.
The loan officer would certainly verify the income by looking at paycheck stubs and W-2s, and possibly even tax returns if you're self-employed. Also verify assets. Look at the bank statements. Let's have the discussion. Where's the money for closing come from? Every month I get someone who says, well, I've got it in my house in a shoebox. I'm like, well, okay, there's some coaching. We need to talk about getting that.
Yeah.
Use that to buy a house.
If people don't understand that, I remember years ago, you and I had a transaction where she needed another $1,000 or something, just something crazy. And she goes, oh, well, I've got that kind of it's like babysitting money. It just is cash she kept on hand. And she just didn't understand why she couldn't use that. It's cash money.
Right. It's cash.
It's cash. It's right here. But where did you get it?
Unfortunately, since 2008, when they had the Great Recession, we ended up becoming the watchdogs for the IRS and the DOJ. So we got to make sure you didn't go to Columbia, make a big score, and now we're buying houses in the United States. So I can take you through that. I can teach you how to institutionalize that money and get it in the system properly.
Well, that's one of the things that is part of my buyer consult is before they even get to you is where's your down payment coming from? Right. Oh, well, I've got this cash that I've been saving, I'm like, well, you need to take that mason jar, go dig it up out of the yard and take that mason jar down to the bank and put it in there right now.
That's step one for sure.
Just get it in the bank.
So, being prepared for those conversations is huge, right?
Yeah.
I need to verify your income, your assets. I'm going to verify your identity, so I need to see your driver's license. So there's steps that we probably should be prepared to handle.
Yeah.
And so maybe have those things handy. Sometimes people get a little caught off guard. It's like, oh my God, I haven't seen a paycheck stub in years. Well, your HR department will have that. So let's go ahead and request it. And then the other part is I'm paperless. I don't get any bank statements. All right, well, let me show you how to get that online. So, just knowing that that's coming, it gets you far more prepared for those conversations in the future.
Well, and it also helps the process go faster because now I don't need to go look for my 2018 tax return. And if you are self-employed, which more and more people are now, because that's a whole other ballgame. That's a whole other ballgame than if you're W-2.
It's just a little more legwork.
Yeah.
So,
but it's different. You've got to, because self-employed people work really hard not to show any money.
I tell people what's good for the tax man is not good for the mortgage man. So when you have a ton of write-offs, it doesn't look great on the mortgage guy's side.
Yeah.
Plus, there are solutions to that problem.
Certainly.
So there's a bank statement loan or some other methodology to get them across the finish line. We just have to explore it all.
Yeah. Yeah. Well, thanks. Thanks for being here. I love talking to you. I was going to say, too bad we don't have tacos or something because, we both love tacos.
Well, thanks. I can certainly go on. So I do appreciate
it. We can. And I know you've got something else that you've got to get to. So I want to be, like I said, very respectful of your time. So how can people get in touch with you?
Well, I have a website, which is homeloansbychristian.com. And then I have a phone number, and it's my cell phone. It's the only number I give out. It's 214-763-8767. And, I realize that I'm needed on the weekends and at nights because that's when the magic happens. So feel free to give me a call. I'm certainly here.
Well, like I said, I've been working with you since 2008. And, people don't stay on a go-to list for that long if they've dropped the ball. So let's just and so what I'm saying is Christian doesn't drop the ball. That's what I'm saying. All right, everyone. Thanks for joining us for Relax, I Got This. I'm Texas Realtor Robin McCoy. Check out all the show notes for the contact information for Christian and myself and to access your free buyer and seller guides. And also don't forget to hit that subscribe button so you never miss one of our conversations. Thanks again. And we'll see you next time on Relax, I Got This with me, Robin McCoy.
Thanks for joining us for Relax, I Got This with Texas Realtor Robin McCoy. Check out all the show notes for contact information on Robin and our guests and to access your free buyer and seller guides. Also, don't forget to hit that subscribe button so you never miss a conversation. Thanks again, and we'll see you next time on Relax, I Got This with Robin McCoy.